to another lesson in the study of success. We believe that success is the doorway to the good life. We want to give you the keys that allows you the ability to access the good life. What I want to talk about today is your personal finances. Your personal finances, we're going to use the term checkbook accounting. That's where you use your checkbook to try to measure your financial health. I'm going to tell you why that's not a good idea, but then I'm also going to give you the reasons why you should measure and monitor and track your personal finances. Let this be one of the keys to the good life. Key number one. One of the reasons why you should track your personal finances is because you need to know what your debt to income ratio is. What is debt to income ratio? Debt to income, DTI. That is how much debt you have that you spend on a monthly basis to the amount of income that you have. An example would be you have $1,000 of income, $500 of debt that you're paying on each month, and we're talking on a monthly basis, then your debt to income will be 0.5, 50%. Let me just start off by saying that's a high number. You want your debt to income to be somewhere maybe in the neighborhood of 20%, at the most 30%, depending on if you have a house, if you're paying student loans. Other than that, usually that's driven by credit card debt or a car note. So the goal is to get that debt to income ratio as low as possible, because that means that when creditors or investors or people that can give you access to capital look at your ability to pay, they can see that you have cash flow because your debt is low and your income is high. Number two, know your net worth. Your net worth is your assets minus your liabilities. An example would be your mortgage, which is your liability, netted out against your house, which is your asset. So your house value, say $100,000, minus a mortgage of $50,000, means that you have a net worth of $50,000. Now, it gets a little more complicated than that because you have to add in your student loans and your credit cards and your car note. When you get all of your assets and liabilities on one sheet of paper, you add and your car is not an asset, by the way. If it has value, depending on what type of car that is, you put the value of the car. If you have a note on it, you minus out the note from the value. Give you a good example is that cars depreciate so fast that by the time you drive it off the lot, usually you're underwater, which means that you owe more than the car's worth, unfortunately. That's what insurance is for. So knowing your net worth is one of the ways that you can measure your financial health.
This video is sponsored by Stringfellow Accounting Solutions. If you're a small business or nonprofit, this is where you want to go. You'll get so much more than just payroll, bookkeeping, and tax prep. You'll get another member of your team, someone who wants your business to succeed as much as you. So check us out at www.stringfellowaccounting.com or give us a call at 1-800-970-9027. Make sure you mention promo code the letter U, TUBE, TUBE, to get 2 months off your first year of service.
Number three, know your assets and liabilities by listing them down so that you can see them on a regular basis. You build off your assets. You want to increase those while lowering your liabilities. By doing that, you increase your net worth. It's just a formula. It's just math that we can do. That's the easy part. The hard part is the practice in doing it. Number four, how much do you need in case of an emergency? There are a lot of different ways to looking at this, and people generally say 6 months worth of expenses for an emergency. I have a different approach. before you get to the 6 months of expenses, I want you to put away 1 month worth of income. What that does is get you ahead of the game so that you're not chasing your tail. If you have 1 month of income in the bank as your starting point, now you never have to worry about waiting into the next check or the next source of funds in order to pay a bill, because 1 month is already there. So 1 month of income is your beginning balance. That's the first thing. Your second or goal under this key is to have 6 months worth of expenses. That's a modest goal. I want you to have 6 months worth of income. That's higher than just having expenses. So that means that for 6 months, you can literally go unchanged in your lifestyle if you have 6 months of income. Still coupled into this goal 3, 1 year of expenses. Now you have some comfort. If something happens and you can't work for a period of time, 1 year of expenses will give you the ability to not stress and to give you the room that you need to plan your next move, to adapt, to pivot. It gives you options. The fourth and final goal that I will put in this section of emergency fund is 1 year of income. So we go from 6 months of expenses to 6 months of income. 1 year of expenses to 1 year of income. That means that if you're making $50,000, you should have $50,000 saved, because that is your cushion to weather any storm that life brings. Usually, you can bounce back or recover within a year. It gives you time. It gives you space. It takes away the panic. It allows you the ability to enjoy some of the good life. The fifth and final reason that you should track your personal finances is to know what your stability, your financial stability, to know where you are, where you stand. There are 3 key performance indicators, KPI. Because in another video, if you want to look back to that about treating yourself or your household like a business, falls right up into that camp. Know your financial stability. Your net worth, know what that is. Your income, most people know what they make. And your credit score. Now, these things are easy to get, but it's to monitor them, to make sure that you're improving or maintaining. And the goal is to, once you get to a level of excellent credit, positive net worth, and an income that allows you the ability to save and invest, you should be able to live off of 80% of your income. That's after taxes. That lets me know that you have the ability to save, invest, and meet all of your monthly needs. So these are things that you can use to implement and bring into your own life so that you can increase your chances of unlocking the door to the good life. Thank you for listening. Thank you for watching. I hope you enjoyed this video of 5 reasons to track your personal finances. We like to upload videos on a weekly basis of business or finance related content. If you like what you've heard, please feel free to share. Please hit the notify button, so that you can be notified when we upload new videos, as well as hit the subscribe button. And we look forward to seeing you again in the good life.